Classic British boot brand Dr Martens is readying itself for an initial public offering and hoping to trade on the London Stock Exchange after more than 60 years in business in what would be one of the first big IPOs of 2021. The iconic footwear brand has engaged Goldman Sachs and Morgan Stanley as joint global coordinators, and Barclays, HSBC, Merrill Lynch, and RBC Europe as joint book runners in the event that the float proceeds. A possible sale or float in the US was mooted as far back as April 2020 but delayed by the impact of the global COVID pandemic. Should Dr Martens proceed, the current expectation is that immediately following admission it would have a free float of at least 25% of issued share capital and would be eligible for inclusion in the FTSE UK indices. Shares representing up to a further 15% of the offer may also be made available as an over-allotment option. Dr Martens chairman Paul Mason described the move as an important milestone for the business, and said, "We have made significant investment in the business over the last few years to strengthen the team, our operations and position ourselves for the next exciting stage of development, as a publicly listed company." The company sells more than 11 million pairs of shoes every year in over 60 countries and was bought by private equity group Permira in 2013 in a $410 million deal. The investment company plans to sell down its stake as part of the IPO. Above all, the proposed IPO is a huge vindication of a strategy that has seen Dr Martens reconnect with the numerous strands of its heritage and bolster a brand that chose to open a flagship in gritty Camden, North London rather than London's West End. The company has leveraged the venue to showcase unsigned bands and promote its musical roots. Kenny Wilson, the bootmaker's chief executive, added, "Our iconic brand appeals to a diverse range of consumers around the world who wear our footwear to express their individual style. We have invested massively to ensure that we deliver the best digital and store experiences to connect with our wearers, and through this we are driving our long-term, sustainable growth." Indeed, Dr Martens made sales of $920 million in the year to March 31, 2020 and pre-tax profits of $138 million. The group has 130 stores around the world, but most revenues come from selling shoes via other retailers. In 2020 its online shop, which it expects will be the main driver of growth over the coming years, accounted for a fifth of sales. Having received UK government business help at the start of the pandemic, Dr Martens handed the grants back when it became clear it was still performing strongly. Prior to the pandemic, Dr Martens had been busy but careful in expanding its store network internationally. It added Miami and Houston to its fledgling US store network in September 2019 and was focusing its physical presence on France and Germany.